The Aussie dollar skyrockets. Let's have a look. Good morning, everyone. Florian.heise here, and welcome to another episode of HeiseSays. I have my morning stein of coffee, and I thought we'd have a look at a very interesting article and a few interesting things about what's happened in the last week to the Australian dollar. Now, before we jump through this, we can see here the Australian dollar surges on iron ore and economic optimism, even as a recession looms. So our dollar has surged. And if we jump over here, we can see in the last week, just 1 week on this chart, it's gone from, a low of 65.7 up to 68.9. Looking at hitting 70 US cents. If we jump out to 1 month, we can see it's, look at that 1 month climb there, guys, in the Australian US dollar. Look at 3 months. Remember that dip, that crash right down to 55 cents? That seems like a distant memory now, doesn't it? We go out to 6 months. Have a look then. Let's go to a year. We can see, there we go. We're back at December and January of this year. Pretty drastic move, isn't it? We'll go to 5 years. And let's go to 10, because I think this is quite interesting. Because we want to look around this area here. 14, 15, 16. And the reason I'm bringing that up is because at that time, a lot of foreign investment into real estate here in Australia was quite high. That was the peak, guys. That was the peak. Because while a move down like this will make our property seem more and more affordable to foreign investors, you know, this big move up, I don't know if it'll have that much of an impact. Particularly what's happening around the world. And they mentioned in the title is iron ore. Now, iron ore is a big player here in Australia. And I've spoken about it before in several videos. I'm just bringing up a Google Earth to show you. So this is iron ore. This is from the Observatory of Economic Complexity. Now, it's a big part of our economy, guys. We are the #1 exporter in the world. Australia's #1, followed by Brazil. And I just need to have a shot of my coffee. Fortunately, it's warming up a bit here in Brisbane at the moment now, so I'm not getting those 9-degree mornings anymore. So there you go, 50% of the export, and this is the pro version of Observatory of Economic Complexity, so it's a bit newer data, but it's still important. And then Brazil is #2, and China is the biggest importer. So Australia and Brazil are the two big players here. Now, if we look at Australia, our exports, we can see iron ore is our second biggest export at 48.1 billion. We jump to Brazil. Let's just compare Australia to Brazil at the top numbers here. Economic complexity, we're 73rd in the world. Brazil is 39th in the world. Brazil is an economically more advanced civilization than Australia. Okay? More advanced. Their product exports are 242 billion. We're 248, so the size of our exports are about the same. Exports per capita are 9.9 for Australia, 1.16 in Brazil. So they've got a much higher population. Their imports are 173 billion. They're 30th in the world. We're 219. We're 24th in the world. So we're beating them there. Imports per capita are 8.7. Theirs are only 826. 826. They're a more advanced economy than us. They're producing more complex goods, guys, by a substantial margin. Brazil. Okay, look at their service exports are 34, ours are 76. Service imports are 70, ours are 85. GDP for Australia is 1.13 trillion. Brazil, 2.19 trillion. So they're a much bigger economy than ours. Look at that. More than double, nearly triple the size of Australia. Nearly triple the size. And we can see here, iron ore is not, where does it rank? It's their third biggest export, and it's 20.5 billion. And the majority of that is going to China. What we'll see here. Hang on. Okay, no, we won't look at that data. But we can see that, oh, guys, China's a big player in their, oh no, yes, God, came up here. I'm getting used to the pro version. So this is the destination of their iron ore. Guys, we can see here that majority of it is going to China. Oh, I like that. Let's see crude petroleum. Will that work? work in save images, things move around. So 57% of it goes to China. Soybeans. I'd say most of it would go to the US. What do you reckon, guys? Nope, 83% goes to China. So I'll stop playing with this and we'll click on iron ore. And then we'll compare that to Australia for China. So 80.4% of our iron ore is going to China, and Brazil only 53.5% is going to China. I can see, you'd imagine most of these European countries would be, whoa, we don't even have any European countries, would be importing from Brazil because the shipping cost would be cheaper, you'd think. So there you go, guys. That's showing us showing us the difference between our two civilizations, and the dollar is still shooting up. So there's one argument as well. Economic optimism too, even though we have a recession, because the RBA, their news apparently was bad, and I'll go through that in a later video today, was bad, but not as bad as anticipated. So the market had priced in worse conditions. Could also be a question I put out there, that our government is doing everything they can. They're throwing the kitchen sink. They're taking out the laundry tub and throwing that as well at property. And we're property hungry. We're property mad. We're a property civilization here. There's also the issue with supply of iron ore from... Oh, wait, we haven't looked at that. Look at the iron ore price. We'll look at the iron ore price, because that's a important thing for our economy here too. Quite an important thing. So I've brought up Google Earth. And what we'll do is we'll just look at our operating mines. You can see here, this is showing you all the mines from Australia. And you can get this data from the Australian Mine Atlas. I'll just turn that off and we'll just turn on iron ore. So you can see Western Australia is the iron ore state. But we'll jump over here back to trading economics and we'll scroll down and have a look at iron ore, 62%, $102. Iron ore, $101. So it's back over $100. Look at that. Did anyone buy some buy some futures here, or you're selling something there to buy back? Oh no, well no, you do it the other way around, wouldn't you? Or maybe someone make a huge loss, expecting iron ore to tumble down, someone make a big gain. Look at that move. Look at that move. So, you know, that's a big jump. And the Australian budget, our budget has been prepared on $55 iron ore. So any significant increase like that will be a benefit to the government's budget and hopefully address some of these issues. So let's have a look at this article, guys. So let's see. The Australian dollar surges on iron ore and economic optimism even as a recession looms. Australia's currency has risen sharply in recent days. From its lowest level in nearly 2 decades of 55.1 US cents in mid-March, this morning it is worth 68.13. This means in less than 10 weeks it has jumped 24% in value against the US dollar, even while the world's economies endure the sharpest global downturn since the Great Depression, and Australia is included. So why has this occurred? You may be assuming it's because of the dire political economic situation in the United States at the moment, pushing the greenback lower. And maybe because money printer goes brr over in the States as well. But currency analysts say it has far more to do with the fact that China's economy has been waking up, so its insatiable hunger for Australia's mineral resources, particularly iron ore, has returned. So could all of the posturing we were seeing in the media about China concerns simply be that? About China putting, embargoes on our iron ore, or more inspection requirements on our iron ore. Will that all go out the window if they can't get it? Brazil suddenly reduces supply. It's all, forget it. Keep going. We need to build. I wonder. Iron ore prices boom. Iron ore prices have been on a tear recently. They've surged to $102 a ton due to increased demand from China and severe supply disruptions in Brazil, one of the world's major iron ore suppliers. Even with the recent rise in the Australian dollar, iron ore prices in local currency terms are very close to their all-time highs. Iron ore is Australia's main export. It accounts for over 16% of exports in 1819. So when iron ore prices surge, the demand for the Australian dollar often increases strongly. Chinese economic activity began to pick up noticeably in March and April after a dismal January. Well, yeah, we looked at that, guys, didn't we? It just pretty much shut down. The The rebound in Chinese activity, being a very industrial-focused economy, is certainly helpful for demand for iron ore, Westpac currency strategist Sean Callow tells the ABC. There's been quite a decent recovery in industrial production, while retail spending has been very negative. It's hard to force people to leave their homes and spend money, but it's very easy to crank up state-owned factories to improve industrial production. In April, Chinese industrial production increased by 3.9% year over year, while retail sales contracted by 7.5%. So even there, consumer confidence needs to improve. So they're just... Here's the question. Will the Chinese economic stimulus save Australia again? Will it save Australia again from this global recession? Will it just cement our relationship there, that we are just lockstep with China? It's just something we need to embrace as a civilization because we're just a quarry of natural resources, everyone. How can we leverage the opportunities from this huge climb in the iron ore price to ensure our civilization isn't so dependent on these things in the future? Look at what Dubai is doing. Not that I'm suggesting we build islands off the coast, but still, they're trying to secure the longevity of their civilization to remove their dependency on natural resources over time. Long-term view. Be interesting to have that in Australia, wouldn't it? So confidence in the global economy. Strangely, analysts say the dollar has also been strengthening because investors have become more optimistic. Optimism is relative, and the mood in recent months has been very dark. So any signs of improved economic conditions can be cause for optimism. Cotton futures and sugar futures made strong gains on Monday, and oil prices have been recovering from their recent lows. And this here is the most important thing for this article, that optimism is relative. I think compared to some of the other situations around the world, Australia's economy certainly could appear much more attractive. It's going to be interesting to see if there's continued unrest in the US, what effect that might have on property here in Australia, on investment in Australia. Commonwealth Bank analyst Tobin Gorey says the US dollar weakened against most agricultural exporters' currencies on Monday. And most big agri-exporters are also dominant energy and or hard commodity exporters. The pandemic likely still has a few twists and turns that will call that optimism into question, he explains. Uncertainty, though, should not be conflated with downside only. The current pandemic is a first for literally everyone, so we don't have any experience of what a reopening recovery looks like. So Aussies are trapped at home. The fact that Australians can't travel overseas at the moment is another reason why the dollar has been strengthening. Even though we generally think of Australia as a major tourist destination, in some years Australians spend more abroad than foreigners spend here. Last year, in part because of a weak currency, Australia ran a travel surplus. Foreign travellers spent 11 billion more here than we spent overseas. Even so, Australians still took 52 billion overseas last year to spend in other jurisdictions. Since we can't travel, none of that money is being spent. It's trapped in Australia's economy to circulate here. Moreover, with Australia being one of the most successful countries so far in containing the pandemic, it only cements the nation's status as a safe and desirable destination to visit once foreigners are allowed to again. That's a good point. That is a good point. I know we've been worried about, tourism has shut down. But when they start easing those restrictions, where are you going to go? Are you going to go to the country that had hardly any impact, or are you going to go to New York? Or are you going to go to the States? If you want to go to a nice sunny country, get that vitamin D and you get that good red Australian beef. Yeah. So record trade surpluses. The surge in commodity prices has seen Australia's trade position post extremely rare numbers. For the first time since the 70s, Australia has recorded 12 consecutive months of current account surpluses, meaning it has been generating more income from its exports and overseas investments than it has been spending on imports and paying out to foreign investors. In the first quarter of this year, the current account surplus widened to a record 8.4 billion, around 1.7% of GDP. There aren't many risk-sensitive currencies that are backed by current account surpluses, Mr. observed. It's very unusual for the Australian dollar to have this type of situation. It's the first time we've seen anything like this since the mid-70s. It means that Aussie's not as likely to be hit by the vicissitudes of investor sentiment. It's not as fragile. And change of circumstances, guys, or change of sentiment. So, well, that's interesting to see. But we are a banana republic, aren't we? We're an iron ore republic. An iron ore republic. Because remember, the currency in Brazil, it's been hammered a few times over the years. The political stability there isn't as boring as Australia, I'd say. And yet they're a more advanced economy, everyone. Dr. Sarah Hunter, chief economist for BIS Oxford Economics, argues that medium-term outlook for services exports is still very challenging, given the continued ban on arrivals from overseas. The closing of the border to arrivals from China in February, followed by the near suspension of international travel in mid-March, led to a 12.8% fall in exports and a 13.6% drop in imports in the March quarter, she notes. Looking ahead, the data suggests that imports will be more impacted than exports over the near term. The transition to online, remote learning for universities will provide some support to earnings from education, which will partly offset the decline in revenue from international tourists. So high interest rates. Yeah, well, yes, high interest. I mean, we're talking about a cash rate of 0.25%, and it's considered high. We really are living in a clown world, aren't we, everyone? We really are. This will definitely go down in history. The Reserve Bank Board met yesterday to discuss the state of Australia's economy. It left interest rates at 0.25% as expected. See, it's not as exciting anymore. It was more exciting when, I'd be watching it on bated breath to see if they'd cut, and boom, they'd cut again, or they'd cut twice over. Now they're just going to sit at 0.25% for a couple of years. While that is a record low for Australia, it is relatively high for the developed world. Just think about that, guys. It is relatively high. And there's even some talk about negative interest rates in Australia. They may have to. Britain's central bank benchmark is at 0.1%. The US Fed is targeting a range of 0.0 to 0.25%. And key interest rates remain below zero in the EU and Japan. Moreover, unlike the Reserve Bank of NZ, Australia's RBA has publicly stated its extreme reluctance to consider moving to negative interest rates. After today's meeting, the RBA governor also sounded a slightly optimistic note. The Australian economy is going through a very difficult period and is experiencing the biggest economic contraction since 1930, Governor Philip Lowe noted. In April, total hours worked declined by an unprecedented 9%, and more than 600,000 people lost their jobs, while many more people are working 0 hours. Notwithstanding these developments, it is possible that the depth of the downturn will be less than earlier expected. And here we go. This is the optimism, guys. This is the optimism. And could that be because the government is throwing everything they can to stimulate? The rate of new infections has declined significantly, and some restrictions have been eased earlier than was previously thought. And there are signs that hours worked stabilized in May after the earlier, very sharp decline. Now, I've noticed this just going out with regards to the pandemic and concerns. It really seems like people have stopped caring. People have really stopped caring. I'm hardly seeing any social distancing anywhere. Very few people bothering to wear a mask. No one cares anymore. You saw what happened with the young guy over in Blackwater? Yeah, it was a false thing. So people are just gonna stop caring. It seems like it. Have you noticed that, guys? Have you noticed that with just Australians aren't worried anymore? They're not worried anymore. And we'll have to see. And I mean, that could be a good thing or it could be a bad thing. It could be encouraging that confidence is slowly going to return if we don't get another second, outbreak or fear or lockdown, and we just get back to normal working. We just deal with it. It could just be Aussie way, guys. Let me know what you think. What have you noticed? Or is it just, my adventuring around Southeast Queensland? The hints of positivity come before tomorrow's important release of the March quarter GDP figures. That's something we'll have to look at, guys. Most analysts think Australia's economy contracted by 0.4% in the March quarter due to the summer's catastrophic bushfires and lockdowns. With a massive contraction baked in, for the current June quarter, that would put Australia in its first technical recession. 2 consecutive quarters of economic contraction since the recession we had to have in 29. Maybe we need to make t-shirts, guys. If we get a recession every 30 years, that definitely it's a collectible item. However, as with interest rates, it appears that Australia will emerge from the pandemic in a less bad position than many other nations, making the local currency relatively attractive. And maybe that's what we're seeing here as well. Well, think about it. If you've got wealth, where are you going to park it? Where are you going to park it? You park it in Australia or keep it in the US? Where will the dollar go from here? This year has been one of the most damaging and volatile years in decades, and we're only halfway through it. There's much more news to come with lots of potential negative shocks, and simmering US-China trade war, the domestic political situation in the US, and the threat of a second wave of outbreaks of the pandemic in Australia and elsewhere. Mr. Callow says Westpac's analysts think the Australian dollar will be sitting around 68 cents at the end of the year, but that assumption comes with a lot of caveats. The recovery in the dollar does seem a bit too strong from our point of view, he warns. Why did it rise 2 cents US yesterday? It seems like there's been a bit of an overshoot, but it indicates that sentiment was probably very negative on the Aussie, and maybe a lot of bears have just thrown in the towel. So there we go, guys. Some interesting takes on why the dollar has skyrocketed. What do you think? Good news or bad news for Australia? Can you see it staying at that 68 cent level? Let's have a look at the key points. I mean, 24% from its March lows. Do you think it'll impact on property? Or will just the US, will the US just mean, by comparison, Australia's looking more and more attractive? More and more boring, stable, vanilla country. We'll have to see, guys. Definitely something to keep an eye on. Look at that iron ore price, up to 101. 101. Let's see, gold is down $15 at 1726. Silver is down 0.3 to 1804. So silver had a little jump too, and gold had a little jump as well. There you go. We'll just jump back here and look at the Aussie dollar, and it's sitting strong. So everything is fallen. Or the US is falling compared to everything. Everything. Oh, here we go. The Brazil real. Well, there you go. It's going down. The US is going down compared to the Brazil real. So probably because there's less demand for their iron ore because of supply issues. Interesting developments here, guys. We'll have to keep an eye on it. As always, please let me know your thoughts and opinions in the comments below. Are you planning for this? Are you going to swoop in and buy some US dollars? Just in case. As always, thanks for watching. Please like, share, and subscribe to the channel. If you're a fan and you'd like to support the channel, there are a few ways you can. You can join us on YouTube or Patreon. You can support us via our affiliate links at Amazon or eBay or Independent Reserve and Kucoin. You can buy a merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care. I'll see you next time.